these bumpy periods, and we're just seeing it resettle now. So as the Treasury yields come back down slightly, you're going to see it rebound. And so what we're seeing is that this is still a positive market. So we're going to have these pullbacks, and we just have to be prepared for that as investors. But we're looking at the long term, and we're seeing upside from here.
Yeah, where though? Where's the upside going to come from, Degas?
Yeah, great question, Scott. What we're looking at is that what we call growth at a reasonable price technology, for instance, like a CDW. So you're going to be moving into those companies. CDW, for instance, provides technology services and products to local governments and educational facilities. The COVID relief really helped out because it put in another $350 billion into local governments, and also $170 billion for education facilities. So a company like CDW is going to do quite well. Also infrastructure. We've been talking about the infrastructure bill. A company like Nucor, which is a steel producer that uses recycled scrap to produce a steel, is doing exceptionally well in this market. And so we really like it because ultimately the operating cash flow yield is around 27%. There's a lot of upside to Nucor, and it's been doing quite well in the last 60 days.
Okay.
And then lastly, if you want,
Go ahead.
Yeah, so we can get into some other names, but just wanted to talk about some places where you can start looking at for opportunities.
Well, the point being that, and I read this statistic earlier, but last year's losers that are so far this year's winners, you think that trend continues?
Not so much the losers. We're looking for quality. And I think once you find quality, those are the investments you want to make. So that's what we're more focused on going forward. Not so much looking back. Let's go forward with quality companies.
Mike, if you look at what happened overseas today, Europe actually reached a record high and finally wiped out the pandemic losses. They were way behind in terms of the European stocks. The IMF upgraded global growth to 6%, which is the best since they've been tracking it in the early 80s in terms of a growth spurt. Is it time for investors to be looking elsewhere if you look across valuations, which you can do now through ETFs pretty easily?
Sure. Oh, you absolutely can. I do think it's got the virtue of being somewhat non-consensus to kind of pivot more globally right now. We're back in this mode where everyone's assuming U.S. is the engine of growth. Obviously, Asia's been pretty resilient as well. But, yeah, I would say that you would want to at least consider it, even though I still think there's a really good case for having a two-speed economy from here. Yeah, global growth going to have a big snapback. But given the kind of differences in terms of back to normal type readings here versus places like Europe, it's not clear that you're going to get the sort of fundamental kind of validation for that call anytime soon. But I think that you have liquidity around the world. It's very much a global market. And people are in this mode of saying this is a lot of early cycle activity is happening around the world. Also, to the extent that value continues to outperform, it's going to be more of a tailwind for overseas stocks.
Shepard Smith here. Thanks for watching CNBC on YouTube.